Welcome to the Deep Dive, the show that cuts through the noise and gets you well informed on the topics that truly matter. Today we're plunging into a fascinating corner of retail. Imagine a company that's not just selling live chickens and, yeah, celebrating record chick day sales, but also delivering things like 94-pound stall mats and 16-foot fence panels directly to customers' properties.
Yeah, navigating gravel roads, pasture gates, the whole deal. It's definitely not your average big box store experience.
Exactly. We're talking about Tractor Supply Company. And our mission today is really to unpack the most important nuggets of knowledge from their Q2 2025 earnings call transcript and the press release that went with it.
Right, so you're going to get a shortcut, basically, to understanding how this company is showing remarkable strength, carving out a really unique competitive edge, especially in that distinct rural lifestyle market.
You should definitely get ready for some aha moments about what makes this kind of specialized rural retailer such a powerhouse. Okay, let's unpack this then. Tractor Supply just had its largest sales quarter ever. Ever.
Yeah, hitting an incredible $4.44 billion.
Which is what, a 4.5% increase in net sales compared to last year?
That's right. And what's really interesting, too, is that comparable store sales were up 1.5%.
Okay, and how did that break down?
Well, it was driven by a 1.0% increase in comparable average transactions, so more people buying, and a 0.5% increase in the average ticket, so spending a bit more each time.
Gotcha. And their earnings per share, diluted EPS.
Also grew, up 2.8% to 90.81 cents. Pretty solid across the board.
It really is. And what's fascinating here, I think, isn't just the sheer size of those numbers, but like you said, the resilience.
Exactly. The resilience of the business model, how relevant their stuff still is, especially with, everything going on in the economy. Hal Lawton, the CEO, he sounded pleased.
He did. He mentioned they exceeded modest expectations, even with that economic uncertainty and, well, kind of a tepid start to spring.
And he made a point to thank their team members, right? All 52,000 plus of them, highlighting their dedication, their passion for that life out here customer.
Yeah, providing that legendary customer service and deep product knowledge they're known for. It really shows how fundamental that customer connection is for them.
Totally. And it showed up in these 4 key trends they pointed out for the quarter.
Right. So first, they delivered comparable transaction growth again. That seems to be
A hallmark. Yeah, they use that word. Just consistently getting people in the door or online.
And second, customer engagement was, well, kind of off the charts, wasn't it?
Absolutely. Numerous all-time highs, I think was the phrase. Things like Neighbors Club membership, customer satisfaction scores, total customers, new customers.
And those record sales of live birds during chick days. You mentioned that earlier.
Can't forget the chickens. It shows that loyalty piece is really embedded deep in their brand.
Okay, so trend 3 was about pricing. Average unit retail, or AUR.
Yeah, basically the average price per item sold, it actually turned positive this quarter, which they said was right in line with what they expected, kind of an inflection point they called out earlier this year.
And that helps the overall ticket growth, right? Puts them in a good spot for the second half.
Definitely. It signals maybe a bit more pricing power or at least stability. And the fourth trend.
Sequential improvement. So sales got better as the quarter went on.
Right. Each period in Q2 performed better than the one before it. June was actually their strongest comp month.
And they said that momentum carried into early Q3 as well.
Which is encouraging. It really makes you think, what do these strong trends tell you, the listener, about maybe consumer confidence or spending habits, specifically out in rural America? And why is Tractor Supply so uniquely positioned to capture that?
Good question. So with those impressive top-line numbers, let's dig a bit deeper. How did it all translate to profitability? And what about specific product lines? Let's start with gross margin.
Okay, so gross margin expanded, up 31 basis points to 36.9%.
Just to clarify, 31 basis points, that's like just under 1/3%.
Exactly. Sounds small, but at their scale, it adds up. They attributed it to, well, disciplined product cost management and sticking to their everyday low price strategy. Gave a shout out to their merchant team.
Makes sense. But SG&A expenses, selling, general, and admin, those went up a bit more, right?
They did, increased by 51 basis points, so just over 0.5%, landing at 23.9% of sales.
And why was that?
Mostly planned stuff. Investments in growth, like higher depreciation from, say, opening that 10th distribution center last year, and also just a little bit of deleverage on fixed costs because comp sales weren't, super high single digits or anything.
But they're watching costs closely.
Oh, yeah. They emphasize cost control and actually hit their highest Q2 efficiency in their distribution network in 3 years. So managing those investments pretty smartly.
Okay. And the balance sheet.
Still strong. They called it a competitive advantage. Inventory was at $3.1 billion. That's only up about 1.5% per store on average.
And that increase was strategic.
Seems so. To improve being in stock on those key CUE items, the consumable, usable, edible stuff like feed, and also reflect some tariff impacts, they seemed happy with the quality of the inventory.
All right. And capital allocation. What did they do for shareholders?
Return of $196 million in Q2. That was through dividends and buying back stock. For the full year, though, the share repurchase forecast is a bit lower than originally planned. Now, $325 to $375 million.
Why it changed there?
It sounds like a disciplined move. They still plan to take out 1–2% of shares each year, but with higher interest rates and needing more working capital for inventory, partly due to tariffs, they're just being a bit more measured. Shifting some capital, but staying within their goals. It's prudent.
Fair enough. Okay, let's switch gears to category performance. What was selling well?
Well, the CUE products, the essentials we talked about, they led the way. Solid unit growth, really the cornerstone.
And Chick Days.
Yeah.
You keep mentioning it, but it sounds like it was a big deal.
Huge. They're most successful to date. More people getting into backyard poultry, apparently. And they saw growth from both new and existing customers across everything. The birds, the coops, feeds, supplies.
It's kind of retail theater at its best, as they put it.
Exactly. It's more than just selling stuff. It taps into that whole self-sufficiency, rural lifestyle thing, builds incredible loyalty, not just quick sales. It really defines their brand.
That's a great point about brand identity. What about pet food? That's been a tougher category industry-wide.
Yeah, they think the market has passed the trough, though. They see a slow and modest recovery cycle starting. They're bringing in new brands from value up to super premium, tweaking shelf space.
And they have other pet initiatives too, right?
For sure. Things like Alley Vet for pharmacy services, the pet wash stations, the mobile vet clinics, those are all driving customer growth and engagement in the pet category.
Okay. How did seasonal stuff do?
Pretty well, actually. Live goods, apparel, gifts, decor. They mentioned having over 650 garden centers now, plus more than 250 of those seasonal tents helping drive lawn and garden sales.
And big ticket items, things like mowers or equipment.
Performed better than anticipated, actually. Customers apparently rely heavily on the team members' advice for those purchases. And they also mentioned getting a boost from that tub effect.
Ah, yes, the tub effect. Can you explain that again quickly?
Sure. It's basically when demand shifts between seasons or quarters. So because spring started late this year, some of the demand for spring items that you'd normally see in Q1 got pushed into Q2.
And maybe even into Q3 a bit?
Exactly. The tub sort of overflowed into the next quarter because of the weather delay.
Makes perfect sense. So were there any softer spots?
Yeah, a few. Pet hardlines, so like toys, collars, not the food gun safes, air compressors, and some of those later cycle spring things like chemicals, sprayers, pressure washers. Those were a bit below plan in Q2.
But they kind of expected that given the shifts.
Yeah, they said it was not unexpected. And those categories apparently picked up again in Q3. It really shows how different categories react, doesn't it? As a learner, how can you apply that kind of understanding to other retailers you watch?
Definitely something to think about. Okay, here's where I think it gets really interesting. Let's talk about what's driving future growth and really setting Tractor Supply apart.
Right, the strategic stuff. And customer engagement is still front and center.
Their Neighbors Club loyalty program, still huge.
Absolutely. A key driver and a meaningful competitive advantage. They hit a record 41 million members in Q2. That's over 80% of their total sales coming from members.
Wow. And record total customer count, too, plus an all-time high in those high-value customers, the ones who shop often and spend more.
And don't forget the Hometown Heroes program. Celebrated its second anniversary, donated another $1 million to charities supporting military, vets, and first responders.
That's great community connection.
Yeah.
And they mentioned something interesting about who joins that program.
Yeah, about 15% of the Hometown Heroes members are actually new to Tractor Supply. So it's not just engaging existing customers, it's bringing new people into the fold. A pretty smart acquisition tool, really.
Okay, how about the digital side?
Grew at a mid-single-digit rate. They saw really robust performance in delivering from the store and same-day delivery.
And wasn't there a stat about how many digital orders the stores fulfill?
Yeah, nearly 80%. which just reinforces how important that physical network of over 2,300 stores is. They're not just stores, they're fulfillment hubs. It makes their brick and mortar a huge asset for digital growth.
So speaking of stores, they're still opening new ones.
Oh yeah, opened 24 new Tractor Supply stores and 2 new PetSense stores in Q2. Closed 1 PetSense. They've got a robust pipeline for growth.
And they bought some other locations recently.
Right, 18 former Big Lots locations. That deal actually gave them the confidence to aim for 100 new stores in 2026.
100? That's a step up.
It is. And they're getting smarter about real estate, too, improving the economics of new stores and remodels and using a fee development program where they manage the construction themselves.
Right. Yeah.
More control over the timeline and costs, basically. Plus, they save about 15% on rent over the lease term compared to a standard developer lease. It's strategic, controlled expansion.
Okay, now for what I think is the really transformative part.
Right.
The final mile initiative. This sounds like a major differentiator.
Absolutely. Colin Yankee, the chief supply chain officer, he basically described it as turning their supply chain into this nimble, purpose-built, digitally enabled, customer-facing network, specifically designed for that rural life out here.
Because the demands are just different, right?
Totally different. They move, as he put it, a lot of tonnage and a wide variety of products through our small store footprint. Needs precision. They've scaled up machine learning for forecasts, added new logistics nodes, launched different delivery options.
Yeah, including using their own team members sometimes.
Right, alongside gig workers. And it's not just about dropping off a small parcel. You mentioned it earlier, delivering dozens of those 94-pound stall mats, 16-foot fence panels, stock tanks, huge feed orders.
On a regular basis.
Yeah.
And drivers have to deal with gravel roads, pasture gates, specific drop-off instructions, maybe even gate codes.
Exactly. It goes way beyond standard delivery. It's extending that legendary service right into the customer's barn or workshop or field. That builds incredible trust.
So how does the network actually support this?
Well, they have nationwide distribution centers doing store replenishment and direct-to-customer orders. Then there's a mixing center network for faster just-in-time stuff. And remember, 90% of their digital deliveries are within 40 miles of a store anyway.
So they have that local density.
Precisely. And they're using their own fleet Tractor Supply drivers with pickup trucks, trailers, stake bed trucks, the kind of vehicle suited for rural deliveries.
And how far along is this rollout?
It's phased. Right now, it's active in 145 hub stores, and those hubs also cover delivery for another 220 spoke stores. So that's about 15% of their total stores covered by this dedicated Tractor Supply delivery fleet.
And the plan is to get to?
About 25% coverage by the end of this year. And importantly, this is on top of their existing same-day delivery options through third-party partners like DoorDash or Shipt. This is for the bigger, bulkier, harder-to-handle stuff.
Gotcha. And the early results? Are customers liking it?
Exceeding expectations, apparently. In the markets where it's live, the average order size is nearly $400.
$400. That's way higher than their usual basket size.
Yeah, a multiple, they said. Their biggest single order delivered this way was over $40,000.
$40,000, wow.
Right. Plus, customer satisfaction scores are higher than for other delivery methods. The return rate is apparently 10 times lower, and they're seeing stronger repeat business from their best customers, those high-value, big barn customers.
It sounds like solving that tough delivery problem really resonates.
It really does. They're essentially playing offense, as they put it, using their unique infrastructure, density, and customer trust to do something competitors like, say, Amazon or Walmart would find really difficult and expensive in these areas. It's more than logistics. It's a competitive moat.
And the return on investment, how does that work?
Well, delivery is treated as an expense, so they can adjust the investment level. But it drives demand in 3 ways. Direct sales through this service, capturing those big online bulk orders that used to have problems with third-party delivery, and handling in-store purchases that customers just can't physically transport themselves.
So it generates revenue directly and also helps sell products that might otherwise be harder for customers to get home.
Exactly. It fulfills demand in a way that wasn't really possible before, or at least not as reliably. It's a strategic game changer.
Okay, beyond logistics, what else are they focused on? Any big events or brands?
Yeah, definitely. They're celebrating Purina Days right now, focusing on that connection with pet and animal owners. Nearly 90% of their customers own one or the other. About half own both. So lots of focus on nutrition expertise.
And looking ahead to fall.
The deer event is a big one. A marquee moment for landowners, outdoor types. Curated stuff like feed, attractants, trail cams, apparel drive sales across different departments.
Any new brands or expansions?
They're expanding Field and Stream, that's a long-term commitment to that iconic outdoor brand, and bringing in Lincoln Electric welding tools, trying to capture more of that rural tradesperson and farmer DIY market.
And then the holidays, of course.
Yep, Halloween, holiday, winter stuff coming up. They mentioned a thoughtful mix of function and festivity, so practical cold weather gear alongside decor and gifts.
All right, so wrapping up the outlook, they reaffirmed their guidance for 2025.
They did. Still expecting net sales growth of 4 or 8%, comp store sales between 0% and 4%, operating margin 9.5, 9.9%, and that translates to net income of 1.07, 1.17 billion or $2 and $2.18 in diluted EPS.
And they feel their model is resilient, even with economic uncertainty and tariffs.
Yeah, they pointed to having mostly U.S. sourced products, strong vendor relationships, and that scalable supply chain. They do expect tariffs to hit more in the second half.
How are they handling those?
Got some modest cost concessions from suppliers on certain items. Haven't really had to raise prices much yet because of it, but they're keeping flexibility for Q4 pricing decisions.
And they expect sales to pick up in the second half.
Yeah, an acceleration in comparable sales performance, driven by transaction growth hopefully continuing, those ticket gains from AUR, and also just easier comparisons or soft compares to last year.
Why were last year's comparisons soft?
Less weather benefit in the second half last year, apparently, and a lower mix of those big-ticket items. Plus, they made a point to say that overall, rural America is doing very well. Strong consumer confidence, people moving there, even disproportionate job creation compared to urban areas.
That deep understanding of their specific customer and market really seems central to their strategy. So thinking about the listener again, how does this whole package, the digital convenience, the strong store presence, and now this specialized delivery, offer a compelling value proposition to you if you live in or near a rural community?
It's a powerful combination.
So just to quickly recap, Tractor Supply had a remarkably strong Q2. Record sales, fantastic customer loyalty shown through things like Neighbors Club, smart expansion both physically and digitally, and then the real potential game changer, that final mile initiative.
Yeah, that unique purpose-built delivery system for rural life, it really weaponizes their logistics, like we said. It underlines their confidence, their resilience, and just how uniquely positioned they are to serve that life out here customer.
Absolutely. So maybe a final thought here. Beyond just the numbers and the strategies for Tractor Supply, how might their approach, that deep community integration, that specialized service model, offer a kind of blueprint for other niche retailers?
That's a great question, especially those looking to thrive when things get complex and competitive. What could you, listening, learn from them about building real customer trust and adapting services, particularly when the big general players maybe can't or won't meet those very specific, unique needs?
It really is a fascinating case study in dominating a niche market. Makes you wonder, what other seemingly specialized businesses out there might be ready for similar growth by truly getting inside their customer's head and investing in solutions, even surprisingly hands-on ones, that really solve their unique problems? Something to think about.